And there it is. The markets are officially closed on this Wednesday, November 26th. Welcome, investors and traders, and a very happy Thanksgiving Day Eve to all of you. We have a lot to talk about here today, everything from silver to Bitcoin to the general markets and what we're seeing in the seasonality of the market really rallying right into the shortened trading weekend. But before we get into all of the charts and all of the good news, let's bring on Nod from our Nod live feed. Nod, you have a whole list there of topics to talk about. Why don't you kick it off and let's get into some of the charts. And I certainly hope that the viewers here are watching and putting ticker symbols in and questions into the chat. We do monitor that. Just be aware that if you put a question out there, your name is probably going to show up on the screen for all eternity on the interweb. Okay, so Nod, kick it off. What do you got?
That's great. Thank you so much, AJ. And I am certainly thankful for everyone taking time out of their holiday schedule to join us. We are so appreciated, and we're going to make this worth your while. Listen, we're here. It's our midweek market report live, and as we get ready to give thanks with our families, Berkshire Hathaway has been giving their brokers a lot of sell orders, and they've been a net seller of stocks for 12 consecutive quarters, which is their longest streak on record, AJ. Kalshi also, which is the betting market, now says that there's a 76% chance of a 25 basis point rate cut in December, and then that's it, because Fed members have hinted that inflation is under control and job market is improving. We'll see about that. On that, 39,000 Americans got advanced layoff warnings in October, which is the highest mark we've seen since 2020, which is up 160% in 2 months, and that's per Market Watch. And the S&P is entering a corrective phase, according to Raymond James. They warned that the S&P may drop 8 to 10% from here in the next 3 months because of a weakness in tech and overall market breadth, which, as we talked about last week, stinks. So, AJ, we've talked about the heavy overconcentration in many of our sessions here, but the S&P has truly become an index of haves and have-nots. And if you look at this chart that I have here per SocGen, 35% of the S&P stocks are in a bear market, which means that they're down 20% from the recent high. And the gap between the average medium stock performance is growing. So, AJ, when we see a divergence like this, it tends to favor things to the downside, which is an ignition for volatility. Can you please talk about the VIX and maybe a tradable instrument like the VXX and anything that comes to mind with this in mind?
Well, we tend to talk about the VIX every weekly market report, and I will say that while it's a great leading indicator, I don't normally trade it.
Right.
Because mainly the VXX and some of the other even leveraged ETFs like UVXY, they can be very dangerous if you don't know how to trade, or more importantly, if you don't know how to manage risk. Now, last Thursday, when we put out the weekly market report, I put out a bunch of targets, and the majority of those targets have hit. But with regard to the VIX, I put a two-part forecast on there. It's hard to see because my diagonal line here is under the red candles, but I had a downside target initially for the VIX at 1968. We hit that yesterday. We're obviously going further today, but if you look straight down at the CCI, and let me tell you, these oscillating indicators that we use could be used for any stock, any commodity, any volatility index like you see here, but we are just about crossed below the minus 100 mark. Actually, we're about 4 points away from touching that. But once we go under that green line, which is the oversold indication on that index, you now have the risk of the VIX moving higher from there. Now, I say the risk of it moving higher, and that's because many of us know that the VIX is, for the most part, inversely related to the S&P. So the markets are trading beautifully when it comes to the technical indicators, and we're hitting extremely high percentage of target hit rates, not just with the major markets and even with Bitcoin, but we're hitting targets on our rapid fire session, which for those who haven't joined in yet, every Wednesday from 6 to 7 Eastern time, we go over 50 stocks in rapid fire format. So we cover 50 stocks in 60 minutes. But not only do I put targets on those 50 stocks, but we also have strategy discussion on how I would trade that based on the option market or some of the option strategies. So
Right.
that invitation is open for anyone who wants to come by and check out the 2-week free trial. We don't have any obligations with that. And I tend to repeat that because, there's a lot of companies out there that try to get your credit card and say, yeah, try it out for 2 weeks and good luck trying to cancel, right? You can't get in touch with them. They go on vacation. We're not like that. So it's a very exciting 1-hour session. And I think it's the most popular service that we offer. But getting back to the VIX, not only is the oscillator down here in an oversold or about to go oversold, but you're right at a key support level on the VIX right here. And this is what I'm talking about. See that? So here's the support level that I believe is going to be tested. And if we look into the short and trading week, now, Nod, I don't know if you have a link to the article that
Yeah.
on ZeroHedge, but for the viewers out there, maybe you could throw that in the chat. And then for those who are listening to the recording, we'll put that link in the description box for the recording. But I talked about the seasonality, right, of the holiday season. And it's more or less the holiday effect is what it's actually called. Now you have the holiday effect, which is the optimism that comes in just prior to the holidays like Thanksgiving. People take time off during the Thanksgiving shortened trading week and they add vacation days and they're in this festive mood. But that optimism tends to creep into the market. But there's another factor that will affect the prices here, and that is the year-end rally, also known as the Santa Claus rally. Now, don't misinterpret what I'm saying. The Santa Claus rally is only a 5-day window.
Couple days, right?
Only like the last 3 days of the year in trading days, and then the first 2 trading days of the new year. That's it. But when you get the holiday seasonality coming in, a lot of the investors will try to more or less get ahead of the Santa Claus rally. So they tend to rally up to get ahead, and then that causes more on the buy side. However, the technical charts are telling us, if we look at SPX, like you were talking about, Nod, if I put in SPX right here and look at
Right.
the S&P index, I talked about this last week. This looks more like a head and shoulders top here, more or less like a complex head and shoulders.
AJ, what does that mean real quick? What does a head and shoulders mean?
It's a topping pattern that is very reliable, but a complex head and shoulders. It sounds complex, right? But it's a head and shoulders normally has a left shoulder, right shoulder, and a head in the middle, right? So you picture that head and shoulder image. But a complex head and shoulder is when you have the 2 shoulders on the left and 2 shoulders on the right. So here's the shoulder on the right. Here's the shoulder, and then you got the head. Now, again, if you have to, go to Google Images and look up complex head and shoulders. This is textbook right here. Now, the line that connects the troughs is the neckline. I'll just put NL to abbreviate. That's the neckline. Now, I do believe we're going to pivot lower. Whether or not we go all the way back down to test that neckline is another story. But I love identifying patterns and trading the completion of the pattern like a cup and handle. I love trading the handle, and we'll get into silver in a little bit because that's a textbook cup and handle that's been forming on not just the silver and gold, but in the mining companies as well. But here's the thing, and the risk to the long buy and hold and never think about selling anything, right? But you've got the risk of the S&P pulling all the way back down here to around 6,600. So you're talking about 400 points, a little bit more than 400 points on the SPX. And those are trading opportunities for us.
For sure.
Before you get all bullish and you're sharpening your horns trying to just buy more at the high, just keep an eye on these resistance levels here, because each one of these parts of the complex head and shoulder is a resistance point that you have to pay very close attention to. And then finally, not if you look at this, there's a very, very small gap right there, just by pennies. And today's high came almost perfectly matched with that. We still have an open gap, but once that gap fills, it will turn into a resistance point.
Correct.
And then a lot of times it will reverse. So again, I love this market. It's great. It's following the charts, the technical signals. And if you don't know how to read a chart, again, we invite you to come on over and learn how to do that through our many different channels that we have.
Well, AJ, I don't want to leave volatility. In fact, with the heavyweights in the NASDAQ, we saw a pretty good shakeout in Bitcoin because Bitcoin has a heck of a tie to the NASDAQ. But this also showed the resilience in gold and silver. So I want to show you this real quick. I have a chart here showing Bitcoin underperforming treasuries by over 10% in the last 12 months. And what this showed us was how strong gold and silver was. So AJ, can you do me a little bit of a favor? Can you talk about Bitcoin, which you have a great hit rate on? Maybe if you want to touch on treasuries, but then maybe silver and gold. And how about those miners?
Wow, this is just, it almost seems too easy to make money in this sector. Now, I don't want anyone to misinterpret that. You could lose money. You have to learn how to control your emotions, how to turn off the financial programs and turn on your charts and just follow the technical signals and use good risk management technique. Now, Matt and CJ from our Cryptex team did a broadcast earlier this week, and I had a chance to listen to that. And Matt Monte came in and was talking about his bias to the upside on Bitcoin, and I would absolutely agree with that. And Bitcoin has done a fantastic job hitting targets. In fact, let me just show you the actual target hit rate. This is a 2-year percentage of 93.75% of our targets have hit. Now, if I show you the chart here, you're going to see that all these diagonal lines here, it's hard to see them, but you see these up, down lines, diagonal lines. Those are my former targets. Okay. Only one target. Let me get that back. Only one target is left open. That's it. Once we hit that upside target, I'm up to 100% on my target hit rate. And now we talked about the oversold condition of Bitcoin earlier this week with our members, but we've got a beautiful pivot point right here with, especially today, with a slightly higher low and a higher high. I would love to have seen a higher volume day, but look down below. Again, going to that CCI, if you look at that CCI, this blue line is the CCI, the Commodity Channel Index, but it's crossing over the green line, which is the buy signal. So today we got the buy signal. The stochastic gave us a buy signal on Monday, and I'm very bullish on Bitcoin right now. Now, I'm not trading Bitcoin. I am trading the Bitcoin sector and stocks that relate to Bitcoin, like Mara, Riot. Well, our members have a great position in Riot right now. Right. I like trading ETH and the related ETHA, ETHE stocks, and they're all hitting targets. But when you bring that back to silver, holy mackerel. I mean, we hit the target on silver today. That was put on our rapid fire. Oh, I'm so sorry. I take that back. I thought we hit the target. We hit it on AG, but we're pennies away from hitting my upside target here on the silver futures, which is set at 54. Now, remember what I said about that cup and handle pattern? Remember that? One of the reasons that I like this position so much is that here's your cup. I mean, this is textbook right here. And here's your handle. However, when we were talking about this last Wednesday on this red candle, I told our members, I said, I love trading the completion of the pattern, which would be the completion of this handle. And that's where I drew and dropped that target right at the brim or the rim of that cup and handle. And look at that, like clockwork. Now, here's the big deal. If it breaks out of that brim or rim, that's synonymous in identifying that pattern, you could get a rally in silver that is equal to the depth of the cup. So you're looking at down here at around 40. What is that? The low is around 46. And the brim is up here around 54. So you got $8 on a breakout. So if it breaks out over 54, you're up there around $62 on silver, and that could just be the beginning of the story. I mean, with a reaction thumbs up in the chat, how many of you are paying attention to the shortage in inventory, especially in London, and what's happening in China? Look at we got a little bit of a delay in the chat, but we've got a very serious situation, especially for COMEX, because they're obligated to deliver silver for anyone who buys a futures contract. They can't deliver the silver because of a shortage. Guess what? They're in default, and that's never happened. Can it happen? Yes, it can happen. Will it happen? There is a slim chance it could happen. I was a member of COMEX for 10 years. It can happen. I'm still talking to several members who are still serving on the board for COMEX, and it's a very serious situation. Now, it's an opportunity for us, obviously. Now, what were some of the positions that we got into with our members with some of the miners? You're on top of that as well. I don't have the list up.
Yeah, so with PAAS was a great one that we looked at. I mean, that one had a heck of a day today, AJ.
Yeah, Pan American Silver, it blew through my upside target that we had a few weeks ago. But the most recent one I recall was AG. Look at this one, folks. Last Wednesday, it was trading down here, and I put an upside target on that one up at 1296. Today, it closed up there over 13.5, and it still has some more room to the upside with this gap fill up here. Now, that gap fill, by the way, for those that are interested in learning about how those work, the gap, once filled, will now act as a resistance area. So you could see a potential drop after the gap fill. But after that drop, I think it's going right back up. So anyone who's thinking about getting in the miners or some of the metals here, I would wait with patience, wait for those gaps to fill, wait for a little bit of a pullback. But I'd be a buyer on the pullbacks, right? Just looking to accumulate and maybe scale in to those positions a little at a time. You know, Nod, you talked about was it Berkshire Hathaway that's in a cash position.
Right.
What are they doing? They're doing exactly what we teach our members to do: how to scale into positions and how to scale out. So when they see overbought conditions in the market, they're going to sell out, move to cash, because the cash becomes a position for them, which in turn turns into opportunity on the next pullback in the market. They're loaded with buying power, so they could participate in a down market.
Well, you're teeing me up because, you know, a certain heavyweight named Google, you know, they stepped outside the box. Berkshire Hathaway took a position in that, and AJ, it's hard for me to ignore this, but I actually have a chart here of Google. You know, over the last couple of months, their market cap went up 52%, and over the last 5 months, the stock has doubled. And, you know, they certainly have the Berkshire Hathaway wind at their backs. But AJ, you know, with some of the participation rate information that we saw with the jobs, and with some other things we've seen a disconnect in other of the weak names in the megatechs. Can you look at Google here, please, and then maybe do a parallel of NVIDIA and Meta, because I think we're going to see a disconnect for what you're going to say about that.
Yeah, I mean, NVIDIA could be in trouble because now all of a sudden there's competition coming from some of their neighbors, right?
Sure.
And I'm just throwing this chart up here because this is the market watch that we have on the Thinkorswim platform, and I have it set to show the biggest mega cap stocks in the world right there. And look at Google. I still call it Google. You do too, but it's Alphabet Inc. Look at that. Today, $3.8 trillion in market cap. It's absolutely mind-boggling.
That used to be a lot of money.
Yeah, it's mind-boggling. But when you look at some of the other mega cap stocks that are right on their heels, I mean, Microsoft is right below them at 3.6 trillion. And NVIDIA is right at the top still at 4.3, almost 4.4 trillion in market cap. But if you look at Google, we've got a pullback today. And I have a downside target on this one at 274. It might seem extreme, but when you look at this thing on a monthly chart, I have to laugh. I can't help it. That's vertical growth. Folks, that's all hype right there. That's not based on valuations or PEs or revenue numbers. That's just pure hype. And if you take, and now remember, my target is down here. If you take a Fibonacci calculator out, I just love doing this with this tool because it's so easy to use. You take the Fibonacci calculator, start it from that low right there, drop it at today's high. Look at where the 50% pullback is for Alphabet. Yeah, I corrected myself there. That's a 234 and change. 234. Can it pull back? Yeah, sure, it could pull back to that. My target is a very conservative one right up here, right at the 23.6 Fibonacci retracement level. So I'm not ready to take a short position in this one. Don't get me wrong. But when that thing starts to increase in volume on the way down, we don't have that yet. But when the volume starts to pick up, option traders, you should be salivating on that one because there's all kinds of spreads you could put on for Alphabet Inc. and making money on the way down. Yeah, definitely. It's a great market.
I want to keep going. A couple of weeks ago, you and I talked about Michael Burry, and listen, the guy is pretty profound, and he says a lot of things, but he's had some pretty big home runs. Yeah, he's had some misses, but he's hinted about making some other comments now that he's shifted his fund towards the end of this month and the beginning of next month. But what he's highlighted is what I'm going to show here on my next chart. So AJ, he says that U.S. banks are now sitting on $337 billion in unrealized losses as of Q3. And I couldn't help but think of this, which I have this laminated on my desk to make me realize that anything can happen. For those that are looking at this, is just a consolidation of all the banks that once were leading into 2008. Some of these names are ones you've totally forgotten about. But what Michael was alluding to is that there are some more troubles brewing. AJ, I'm not trying to be a fearmonger, but with that said, do you see any opportunities either way in the XLF? And how about some of the big names like Goldman Sachs or JP Morgan, please?
Well, let me take a look. Just looking at Bank of America, for instance, because one thing they're not factoring in to these unrealized losses is the absolutely insane short position a lot of these banks are holding in silver. Right? They've rehypothecated themselves into a hole. And their lease agreements are getting much more expensive to hold and on the short side of their positions. And Bank of America is one of the silver haters that many talk about over the years. Now, when you look at Goldman Sachs here and then compare, I'm going to flip back and forth. Look at Goldman Sachs, look at Bank of America, look at Goldman Sachs. Are you dizzy yet? Those charts are almost identical. Right. And what did I just talk about at Head and Shoulders? This is very close to being a textbook head and shoulder pattern with a shoulder over here, way off to the left. And if we pivot lower, here's your shoulder, here's your head up here, right? Neckline would be way down here. Now, again, a lot of these stocks could very easily pull back and correct to the neckline. But the big deal is when all of these major banks and even some of the brokerage companies out there start breaking out below the neckline, you've got stop loss orders built up below the market down there. That's just going to trigger a sell-off. And you got the bots out there, which we have Andrew Faldi helping our folks build their own bots. He's got a crash course coming up in about 10 days or so. I don't know the exact number, but Andrew Faldi is showing our members how to build their own bots. So the bot is more or less like your virtual trader. It's going to put the orders in for you once the conditions are met. Now, this is unlike anything we've ever seen because years ago you hear about the black boxes and the algorithms triggering, flash crashes and all that good stuff. But now you've got more bots in the world than ever before in the history of the U.S. markets. And no one's talking about that. In fact, maybe I'll make that my next article for ZeroHedge coming up. We have a long weekend. We could put some effort into that one.
Right.
But we're going to have the battle of the bots. Oh, there's the title.
There it is. This is easy, right?
Who wants to put a better title than that in there for the next article? Go ahead, put it in the chat, and I'll consider that. Anyway, no one's talking about that, and they're not talking about the silver squeeze that could ultimately happen. Now, you were talking about, what was it, the other ETF, XLF? Is that
that's the financial XLF, the ETF. I mean, people can trade it. It's very liquid. But it also tends to diverge sometimes from the big ones that you saw. Because you did a layover of Goldman Sachs and JP Morgan and Bank of America. The XLF does not have the same looking chart.
No, it does not, because this one, you're going to have this more diversified. If you're going to pick an ETF to trade the banks or the financial sector, I would say this is the best one.
For sure.
Because if you go quick at the options, you got a lot of liquidity there, and you don't have super wide bid-ask spreads. When the markets are open, these get very, very tight. I mean, by pennies in some instances here. So for the downside, if you're thinking of playing the banks or the financial sector to the downside, they've got really cheap or inexpensive puts. Now, I wouldn't go out there and buy the weekly puts. Personally, I like to give myself a lot more time. I would go out to February, March, or even April, give yourself some time. But if you're looking at this, again, you've got a downward channel here. Look at that. That's a perfect textbook channel. And we're right at the top of the channel, which is going to be resistance. So I think you could see XLF pull back. Again, maybe I'll put I'm not going to put a downside target yet until we get a pivot, but maybe they'll come up and I could do a two-parter on the rapid fire tonight. We'll see. We'll see how that goes. But well, listen, this is a very interesting market.
Speaking of rapid fire, we've got 5 minutes left, and we have a lot of people on here that want us to look at some tickers. Would you mind doing that for me, AJ?
Let's go. Who's
all right, cool.
There?
So Scott Russell, I mean, we're going back to the Bitcoiner. He'd like BITO. That's one that we've traded. That's one that you've had a really good track record on. Can you look at BITO, please?
Yeah. Now I'll go out there and put a target on this one, okay? Because this one is going to track Bitcoin, and I'm already bullish on Bitcoin. Now it doesn't look like much of a move here, right? Because we got this big candle, but we also have more green than we might want to see. We already have 4 green in a row, but there is a gap up here. I don't know if you could see that. It's a very small open gap that's going to match up with that moving average. So I'll put an upside target on that at 1488. And you might think, oh, big deal. What is that? 81 cents. Oh, you're really going out on a limb, AJ, with that target. Yeah, but guess what? If you trade the options on that little bit of a move in BITO could wind up with a 15 or 20% return if you go out there to March and maybe buy these $16 calls or these $15 calls for 95 cents or $1. You could, if you buy that for $1, you sell it for $1.20, you make 20 cents on that. And that wouldn't be a very big move in the underlying stock to get to that point. So again, I know there's a lot of people that fear options because they've read some of the books that say it's the most risky thing you could do. Well, so are credit cards, folks, right? If you use a credit card the wrong way, you're going to get yourself in financial debt and in bankruptcy eventually. But there is a way to properly use credit cards so that you can leverage your business and carry on business without having to worry about going into financial, bankruptcy. Same thing with options. There's a safe way to do it. And then there's the gambling aspect where people go out there and just buy cheap options. Learn options in a conservative way, learn how to manage risk, and you'll be fine. All right, so there's the target on there, 1488 on that BITO. Go ahead.
Let's go all the way out to Hawaii for a longtime member, Mark Siegel. He's looking for Riot, RIOT. We're going to stay in the space.
Well, this one I still have an upside target on, so you can hold me to this on the recorded line, 1723. Now, that's a conservative target, I believe. Because look, if I use the Fibonacci's on the way down, watch. Here's the top, drop it at the bottom. Where's my target? Just shy of the 50% retracement level. See, my 50% retracement level is 1782. So I'm coming in shy. So I'm keeping that upside target on that one. And I think there's a good shot that one can hit. Here's another one that has a great selection of options and in a pretty tight market. Look at the March 16 calls. You could buy those for around $275. That's $275 for each option. So anyone can get involved in that market. Anyone. Yeah. What else? We got time for one more, I think. Maybe.
All right. Well, one or two more. Our good friend Eric Mihailovich, he's looking at Constellation Energy. Now, energy is all the rave with all this going on to the power centers for AI. I mean, they're going to be on the base floor. Do you see something in the technicals that would allow you to trade opportunity?
What ticker are you using?
CEG, please.
TEG?
Yeah, C.
CEG. Yeah. I'm sorry. Okay.
Mm-hmm.
I don't really like this one all that much. I mean, mainly because this is a triangle pattern here forming. And if you're not careful, you could get bit by that one because a triangle is a breakout pattern that you trade on the breakout. If you're trying to forecast the breakout, you basically got 50-50 shot. So there's your triangle. I would say if you're going to buy it, I would buy it above that level right there and try to buy it right around 370 and try an option spread trade with that one. Yeah. So we got 30 seconds left. How about this? I'm I'm going to break away and just wish everyone a very, very happy Thanksgiving. We've got a lot to be thankful for, folks. We're very fortunate here living in the U.S. And unlike many of those who are now suffering at the hands of very extreme conditions in Nigeria, please, I said this yesterday, but please, I don't say this often, but please pray for those folks. They're not going to be able to sit around the Thanksgiving table with their family and celebrate and be thankful for what they have. So please be very much in tune with what's going on in the world. Keep your eye on these charts, manage risk, but most importantly, take the time and spread those hugs out with your family. That's the most important thing right there. So, thank you so much for your content today and your participation, and we'll talk to you next time. So long.